Hi, welcome back to Whole Life Angel. This is Angela, and yes, it's kind of a play on my name, if you were wondering. Now, I will be going over some information as I read it. Now, each section can be rather long, like I mentioned in my introduction, and first one I'll be going over is general insurance. I'm not going to go detail by detail because I don't want to be like copying everything in here, but I will sort of make it my own and speak about what certain things mean or whatnot. And each one of these sections, like for general insurance, it goes from A to F with about 1 to 7 or less category topics in here. So I'll be going over those in small parts, but I will likely add onto it each, depending on how long or short each one of those are. Now, it may be a little bit confusing or boring, but we'll see what we can do. Maybe I should add a little bit of background music. It's kind of music that I'm into, but not all that much into. It's just a free, non-copyright version that I don't have to worry about getting copyrighted on. So it'll definitely be helpful in avoiding that stuff. Let's see, where do I have it at? Sorry if my mic is picking up a lot of background. And I will have where these musics come from, because of not wanting to be crude to the ones that actually made it. That's probably low enough, right? Nah, maybe a little bit lower. Don't want it too low that we can't hear it. Well, y'all can't hear it. But also where it's not overpowering me. If it works, it works. If it doesn't, I don't know. But Streamlabs is really annoying with all this skip frames. Ugh. Alright, on to the topic of general insurance. Now, here are the terms to know. There's an agent producer, both the same, and brokers are now technically being called a producer as well, but they're different from an agent. An agent producer is a legal representative of an insurance company, and the classification usually includes agents and brokers. Agents are the agent of the insurer. And an insurance producer not appointed by an insurer is deemed to represent the client, which is a broker. The applicant or proposed insured is the person who is applying for the insurance. The insurance policy is a contract between the policy owner and or insured and an insurance company which agreed to pay the insured or the beneficiary for loss caused by specific events. The insured is, of course, the person covered by the insurance policy, and the person may or may not be the policy owner, such as if the insured is a minor, the policy owner would be the one paying, could be the one paying for it, and that would be the guardian or parent of the minor. The insurer or principal is the company that issues the insurance policy. The policy owner is, of course, the person entitled to exercise the right and privileges of the policy. The premium is, of course, the money to the insurance company for the insurance policy. The reciprocal is a mutual interchange of the rights and privileges. Now, for the key terms and concepts, insurance is a contract which one party, who happens to be the insurance company, agrees to indemnify, which means to make whole, the insured party against the losses arising from an unknown event. In life insurance, the policy protects the survivors from losses suffered after the insured's death. Insurance is classified as a transfer of risk of loss from an individual or a business entity to an insurance company, which in turn spreads the cost of unexpected losses to many individuals. Now, if there were no insurance mechanism, the cost of a loss would have to be borne, or bore, however you want to pronounce that, solely by the individual that suffered the loss. As for the risk management key terms, for the risk, you have pure risk and speculative risk. And risk is classified as the uncertainty or chance of a loss occurring. The two types of risks, of only one of which is insurable, is pure risk, which refers to situations that can only result in a loss or no change, which has no opportunity for financial gain. It's the only one that the insurance companies are willing to accept. Now, as for speculative risk, which involves the opportunity for either gain or loss, an example of speculative risk is gambling. These kinds of risks are never insurable. No insurance company would want to do a speculative risk because you can gain or lose, and they're only there to cover losses. I probably sound basic for the most part, but I gotta work on it, I guess. I kind of close myself off from the emotional stuff because I tend to get too emotional. Alright, and continuing. Hazards are conditions or situations that increase the possibility of an insured occurring a loss. Hazards can be classified as physical, moral, or morale. And conditions such as lifestyle and existing health, activities such as scuba diving, are hazards and may increase the chance of a loss. As for perils, they're the causes of loss insured against by the insurance policy. In life insurance, it insures against the financial loss caused by the premature death of the insured. For health insurance, it's the medical expenses or loss of income caused by the insured sickness or accidental injury. Property insurance is for the loss of physical property or the loss of its income producing abilities. And then you have casualty insurance, which is against the loss and or damage of property and resulting liabilities. Loss is considered as the reduction, decrease, or disappearance of the value of a person or property in the insurance policy caused by a named peril. The insurance provides the means to transfer the loss. Exposure is a unit of measure used to determine rates charged for insurance coverage. In life insurance, all of the following factors are considered in determining those rates: the age of the insured, the medical history, occupation, and sex. And a large number of the units having the same or similar exposure to loss is known as homogeneous. That's basically like human race. And that is the basis of insurance, is sharing risk among the members of a large group with similar exposures to loss. And I'll leave it at that for now, since this is getting kind of long, and pick up with the methods of handling risk in the next video, which I'll probably record tomorrow or when I have the free chance, because it is getting late and I have morning meetings to get to on Zoom. I hope the skip frames didn't bother this too much. If so, I will re-record, I suppose, or go back over it in a live stream. Probably without all this effects. Unless I find a way to clear out the CPU. Streamlabs, you're annoying, but you're the only one I know of. Anywho, I'll catch you guys next time.